welcome back to Cheddar's Opening Bell. The real estate market is only continuing to heat up as home prices skyrocket across the country. The median price of an American home jumped nearly 20% in the year, with the number of million-dollar cities tripling since 2020. For more on the historically tight real estate market, I'm joined by Tim Rood, SitusAMC Managing Director, joining us now. Tim, according to recent data from Zillow that I cited there a moment ago, the number of U.S. cities with the average price tag of about $1 million, that has tripled in the last year. How much higher can prices actually go, and is there any indication that we could see a potential housing market crash sometime soon?
Hi, it's great to see you. What I would say is, at a minimum, this housing recovery is like the most durable thing I've ever seen. So you've had 120 months of straight up appreciation. And what's really interesting about the appreciation that you're still seeing in the beginning of 2022 is it's happening despite the fact that, as you just mentioned, values went up 20% year over year, and you've seen interest rates go up 5% and 1.25%. Now, net, what that equals out to is about an increase of about 30% in the monthly payment for somebody in the market for the same house. So not insignificant, but you still see the pace of sales is keeping up with last year, which was near record. I think it was about as close to the 2005 record as they come. And that's happening despite, I don't know how it keeps happening, but inventory goes down even further, another 20%. So I don't see any rational explanation, not yet, for why there'd be a housing crash. You're seeing, the upper end, to your point, listings of over $1 million. It's so anemic. It's as anemic as the number of listings under $200,000. It just, I guess it's a lot like the country. It's just a polarized haves and have-nots. So yeah, I don't see any of that changing for the foreseeable future, particularly since rents have been keeping pace with home price appreciations, and the supply is as anemic for rental properties as it is for owner-occupied residential properties.
Obviously, great news for investors, right? And if you're a homeowner, right. But if you are a home buyer, you are looking at this market and thinking, when are prices going to cool off? Do you see that happening sometime in 2022? And if not, again, when?
Yeah, it's funny. You expected the market to moderate, right? But it's not moderating. We all thought math, logic, reasoning would play out, as rates went up and values continued to go up, but it hasn't happened. What's interesting is that you're seeing a migration like this. It's an accelerated migration out of expensive urban areas, expensive coastal areas, and the urban areas, of course, being dense as well. It started out, the migration went to the Sun Belt. So you saw like Tampa, Miami, Arizona, Vegas, boom, everybody ended up there. They had, great climate, they have far more affordable, more indoor space, more outdoor space. But frankly, that pond is fished out from an affordability standpoint. So what you're seeing now is folks are saying, hey, look, the work from home thing, well, it seems like it's pretty much here to stay for a lot of us. And the job market is so strong that people are looking at, like, say, the flyover states and thinking, man, instead of that being a punchline, that looks like an opportunity, right? It's so affordable. So you're seeing a lot of that migration north and west.
All of that amid this kind of recent data point, right? Mortgage applications, that has dropped to their lowest levels in about 2 years as mortgage rates have started to kind of tick up. Is that a potential indicator of the beginning of a cool down, or do you see that as more momentarily, maybe amid kind of continued constraints around inventory and just kind of maybe a moment of home buyers digesting kind of higher rates?
Yeah, so we saw, like I said, somewhere around 1.25% interest rate hike. It didn't even hit a speed bump. We just glazed over it. Normally interest rates, when you see, say, a 0.5% interest rate increase, it's going to equate to, in a median home, about $100 a month. So nothing too significant. I know that there's, all the cautionary tales of interest rate hikes, 4 to 7 hikes coming up in 2022. I'm less optimistic that will happen. But the fact of the matter is, demand is still outpacing supply. That's not going to change anytime soon. What's going to happen are probably one of two things. The government's going to have to reevaluate kind of its role in the mortgage market right now. They're backstopping 95% of the originations. And sooner or later, when the government is involved in buying or guaranteeing mortgages, what you're doing is you're subsidizing interest rate. You're lowering the interest rate, and that's adding fuel to the fire. And sooner or later, someone's going to have to reconcile that. Should the government really be, buying my second home? Should it be buying my fourth investment property? Should it be buying my cash out refinance loan? Because again, you need to take the kind of narrow the aperture what the government's involved in and slow that down a bit. And also you're going to see mortgage lenders, because of the refinance volumes down, they're going to have to find ways to lay off fixed costs, go to a more variable cost environment so that they can be competitive. And they'll lean into companies like SitusAMC, who will provide those services, on a per the drink basis, but they're all going to have to kind of manage through the higher interest rate environment, which is inevitable, but I don't think is going to certainly result in a crash. Moderation for sure, but not certainly any crash.
You mentioned the Fed's expected kind of interest rate hikes. For home buyers out there and even homeowners, what's the potential impact of some of these hikes? While you may not be in the camp of 4 to 7 hikes, there is guaranteed to be some sort of interest rate hikes, whether it be 2 or 3.
Yeah, I mean, look, hopefully what we'll see is that you'll see the interest rates go up moderately, and you'll see an offsetting balance in terms of the appreciation levels. That seems to be a logical thing, and it's a welcome thing. You can't have 20% appreciation rates without expecting a big boom in a couple of years' time. One other thing, though, is you're going to start to see this could impact ultimately inventory. My friend Mark Fleming from First American always makes this point, which is if you're a home seller, and you refinanced into a 2 3/4% 30-year fixed, all of a sudden interest rates are 4.5%. Values have gone up however much. You're evaluating whether it makes any economic sense for me to downsize, and it probably doesn't, right? Because the way the market has worked for the last 40 years is you would get in at a certain price point. Interest rates have been going down for 40 years. In a couple of 5, 6, 7 years, you sell and you buy up. Well, that breaks when you have interest rates that are going down. Or interest rates that start going back up and values that are going back up. So you really kind of lock people into their houses, which should chill, any additional supply and inventory that we were hoping for.
Really quickly before I have to let you go, we've only got about 30 seconds, but I want to get any tips you have for home buyers out there who are still looking at this market, hoping to get in, but just uncertain on how to get into the market right now.
Boy, it's like drive until you comply. There's no better way to do it. I mean, right now you just keep driving until you can afford something. And again, because of the hot job market and because of the work from home stuff, that seems more reasonable. But I think what you're actually seeing is it's going to be fascinating to see how this plays out. 55% of people 30 or below are living with their parents. So that means I'm not paying rent. I'm not paying my student loans because those are still on forbearance. I'm saving up. So you might just see, again, a splurge of people that are actually going to skip over the first step, usually in the path to home ownership, which is renting. It might just jump right into home ownership. So you could just see a flood of people, millennials, right now that are stacked up right around that buying age, first time home buying age of around 30, 31. And then you've got another cohort of millennials that are just getting to that age of, buying their second home. So, look, I think you got to be in it to win it. Nobody made any money leasing or renting anything, and the prospects for the housing market are strong and will continue to be for a while.
All right, appreciate the insight. Tim Rood, SitusAMC Managing Director.